Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Thursday, December 1st. Jen Amos is off today. U.S. stock futures are pointing to a flat open following the biggest Wall Street rally in more than 2.5 years. Yesterday's gains were prompted by a coordinated move by global central banks, including the Federal Reserve, to reduce the cost of dollar financing. The measures are designed to ease funding strains on European banks and prevent the sovereign debt crisis from creating a global liquidity crunch. The move also spurred a huge rally in the European markets, sending Frankfurt's DAX index up 5%. And today, the focus remains on Europe, following successful bond sales by both Spain and France. Spain sold the maximum amount of debt that it targeted, and while its borrowing costs rose, they remain below the 7% level most analysts see as unsustainable. Meanwhile, the yield on France's benchmark 10-year bond actually declined. But despite the renewed investor optimism, Europe is still facing some extremely strong headwinds. Markets' Purchasing Managers' Index showed that manufacturing in the Eurozone contracted at its sharpest pace in more than 2 years in October. It's also the first time since the height of the credit crisis in 2009 that all member nations saw their output fall, including the core countries of Germany and France. But it's not just Europe facing a slowdown in manufacturing. Two separate surveys showed that China's manufacturing sector contracted at a faster pace than expected last month. Analysts say the data may force China to ease its monetary policy to support growth. The U.S. manufacturing sector will also be in focus this morning, when the Institute for Supply Management releases its November report. A reading of construction spending in October is also due out at 10 a.m. Eastern Time. But right now, investors are digesting the weekly data on initial jobless claims. I'll bring you those numbers after the opening bell. Turning to corporate news, retail sales results are starting to roll in for the month of November, including the busiest shopping day of the year, Black Friday. According to the National Retail Federation, a record 226 million shoppers hit the stores and websites during the weekend after Thanksgiving. The average consumer spent about $400, 9.3% more than last year, bringing the total spending to a record $52.4 billion. And those dollars are likely to show up in retailers' same-store sales figures. Retail Metrics estimates that they'll jump more than 3% over last year's results. Macy's already said its November sales jumped 4.8%, helped by a very strong Black Friday. Most retailers are reporting their results this morning, and I'll have more individual sales figures for you after the market open. We're also waiting on reports on domestic auto sales from the major car makers. Overall, TrueCar predicts an increase in the November numbers over last year. Among the U.S. manufacturers, Chrysler is expected to post the biggest gains at 38%. Ford sales are expected to rise more than 10%, while General Motors may show a 6.4% increase. That's the latest from Weiss Research. I'll be back after the opening bell with all the market-moving news, including speculation about a possible acquisition of Yahoo.